Subscribe to my channel Report Stock.
Welcome to the deep dive. You sent us some really fascinating reports about a company, Yunji Inc., that seems to be caught in a bit of a paradox.
hmm
On one hand, they're launching products, some really successful ones actually, showing real market savvy. But then you look at the financials.
Right, and financials are flashing some, let's say, pretty serious warning signs.
Exactly. It's like watching a top chef make amazing food while the restaurant's accounts are kind of struggling.
Yeah, that's a good way to put it.
So today we're doing an in-depth look at Yunji Inc.'s half-year 2025 performance. We're drawing from their recent earnings call highlights and, their detailed financial reports.
It's a really compelling situation.
It is. It feels like a snapshot of the challenges lots of companies face today, doesn't it? That whole unpredictable economic climate thing.
Absolutely. And our mission here is to get past those headlines, really unpack these reports.
Yeah.
We need to separate out the operational wins, which are definitely there,
Yeah.
from the financial realities, which are, well, also definitely there.
Stark realities.
Pretty stark, yeah. So this deep dive should shed some light on their strategy, how they're trying to navigate a market that's, well, tricky. It's that classic balancing act, isn't it? Growth aspirations versus financial discipline.
Right.
We'll dig into the numbers, the narrative, try to understand not just what happened, but why it matters for Yunji and maybe for other companies too.
Exactly. And you, our listener, you want the full picture, right? Not just the sound bites. So we're here to help connect those dots.
Let's do it.
Okay, so let's dive in. Let's start with the good stuff, because Yunji really has had some impressive strategic wins.
We certainly have.
When you look at their products, their execution, they've hit some home runs. Let's start with that flagship launch. Kingsang Organic Milk.
Mhm.
This wasn't just a quiet launch. It made a splash. RMB 5 million in sales right out of the gate.
Yeah, 5 million is pretty remarkable for a launch.
And it's not just the number. The CEO, Shanglu Zhao, he really emphasized its role in building their health-focused brand awareness. So it's strategic.
And what's interesting about Kingsang, beyond just the sales, is how it fits strategically. It's right at the heart of their organic health strategy.
Right, wellness, natural products, big trend.
Exactly. And they see it as key for expanding into traditional retail too, using their network of community leaders.
Ah, okay. So bridging that gap.
Yeah, it's multi-channel thing.
Mm.
Direct-to-consumer meets retail via the community. It's quite a sophisticated approach, actually, something bigger brands sometimes struggle with.
Okay, interesting. And it wasn't just Kingsang, right? Other products did well too.
No, definitely not a one-hit wonder.
Their Life Slimming Coffee that exceeded RMB 10 million in sales. And the Probiotic Bolus, that one hit nearly RMB 70 million.
70 million, yeah,
Right.
that's substantial.
Right. These numbers suggest real consumer demand, maybe some loyalty there too. It looks like a portfolio with some real traction.
Diversified traction.
And sticking with that health theme, they had other wins too. Freeze-dried sea buckthorn powder, herbal essentia paste, both pulling in over RMB 5 million each.
Again, fitting right into that organic health strategy.
Yeah, and it aligns with the national health agenda too, which probably doesn't hurt public perception or maybe even regulation.
Could provide a favorable environment, sure.
Mhm.
It shows a cohesive strategy, tapping into that societal shift towards health.
And it's not just health. Their beauty brand, SUYE, seems to be doing well too.
That's right.
The SUYE Pro X-Lane Firming series that generated over RMB 10 million in sales. So they're showing they can diversify, apply their model elsewhere.
You've really laid out the case for their operational strengths there. And what's fascinating isn't just that they're succeeding with specific products, but how consistently they're doing it across different lines.
Yeah.
From milk to coffee to beauty, and how they tailor the distribution community leaders, Tmall upgrades, live streaming influencers. They seem to understand niche markets really well.
Okay.
And that solid gross margin, 47.3%, that's crucial. It shows customer loyalty, good product curation in high-margin stuff. They know their customers.
So they can make money on the products themselves.
Yes, profitability at the product level is strong. And that operational excellence, that brand building,
Yeah.
it's a vital foundation, especially when, other parts of the business face headwinds.
And that's the perfect segue, because it's that strength that makes the overall financial picture so interesting and maybe concerning.
The contrast is stark.
Because despite those wins, Yunji faced some serious financial headwinds this past half year. We have to dive into this side too.
Absolutely.
Okay, so total revenue, it's a pretty big drop. From RMB 233.8 million a year ago down to RMB 158.3 million.
That's a significant decrease.
Yeah. The company points to weakened consumer confidence, tough market conditions, and also, interestingly, strategic product selection refinement.
Okay, so they might be cutting some lines.
Seems like it. Probably lower margin stuff, things that don't fit the core strategy, which makes sense long term, maybe, but definitely hits the top line short term. You can see it right there in the numbers.
And that revenue drop, even with that strategic refinement, really highlights how tough the broader economy is.
Right.
It suggests even their smart moves are getting hit by, people just spending less overall, especially on discretionary things like health and beauty.
Weak confidence means fewer purchases.
Exactly. And it shows how quickly good individual product sales can be sort of overshadowed by these bigger economic forces, leading to that wider net loss.
Which brings us to the net loss figure. It worsened significantly. They reported a net loss of RMB 100.7 million.
Oof.
Yeah. Compare that to RMB 8 million net loss a year ago. It's more than a tenfold increase.
Wow.
It signals a huge jump in their financial challenges, clearly outpacing those product wins, really shows the difficulty of staying profitable when spending drops and costs are maybe going up or shifting.
A kind of exponential jump in the net loss, even with a refined product mix, really underlines the pressure they're under.
Yeah.
It suggests that while the growth margins on what they sell are good, the overall volume just isn't enough to cover everything else, fixed costs, operating costs.
Right.
It's not just a blip. It feels like a structural challenge made worse by the current market. Lots of companies face this in downturns. Healthy product margins are great, but turning that into overall profit when demand is soft, that's the real battle.
Takes serious cost control, agility.
Exactly. Things few companies really master.
So given that really alarming net loss figure, let's dig into where the money's actually going. The expenses. Because it's not just revenue down, costs are telling their own story.
Let's unpack the expenses.
Total operating expenses went up from RMB 149.1 million in 2024 to RMB 179.4 million in the first half of 2025.
Up, despite lower revenue.
Okay. And the main drivers. Higher member management fees, which for Yunji's model, that's basically supporting and incentivizing their community sellers, right?
Yeah, that's core to their direct sales community leader model.
And personnel costs. So core operational costs increased even while revenue fell.
That's tough.
But there are nuances. They are trying to manage things in places. Fulfillment expenses, for instance, actually decreased quite a bit.
Oh, okay. That's positive.
Yeah, lower warehousing and logistics costs. So efficiency gains there. Maybe streamlining the supply chain. Smart move.
Definitely.
But then sales and marketing expenses went up slightly, linked to membership growth, they said. So investing to grow the base, maybe.
Necessary investment, perhaps, but needs to pay off.
And technology and content expenses decreased. They called it staffing optimization.
Likely cost-cutting in tech.
So cutting in some areas, but these other core costs, member management, personnel, they're rising.
It really sounds like they're trying to manage costs, but it's an uneven fight, isn't it?
Yeah.
Cutting fulfillment and tech is good, shows they have some levers. But that increase in member management fees, that's very telling for Yunji.
How so?
Well, their whole model relies on that community leader network. Those fees are the lifeblood of their sales force. If those are going up while revenue's going down.
It means they might be spending more to keep the engine running. Or paying more commission in a tough market.
Could be either, or both. But either way, it eats into the overall profitability even more. Highlights a real tension in their model right now.
Okay, now for the really big one. The one that probably explains a lot of that net loss jump. General and administrative expenses, G&A.
What happened there?
They spiked dramatically. From RMB 33.5 million to, wait for it, RMB 93.4 million.
Wow, nearly tripled. What drove that?
One main thing, a huge allowance for credit losses.
Ouch. Allowance for credit losses.
Yeah. For a company like Yunji, with that community sales model, maybe extended payment terms with leaders, this isn't just an accounting thing, is it?
No, absolutely not. It signals a real concerning rise in receivables they don't expect to collect.
So money they're owed that they think might just disappear.
Essentially, yes.
Yeah.
Could be stress among their network partners. Maybe end customers aren't paying. It directly hits reported profit and, crucially, future cash flow.
Which brings us to liquidity, cash.
The lifeblood, yeah.
They saw a decrease there, too. Cash and cash equivalents went down from about RMB 243 million at the end of 2024 to RMB 217 million by June 30, 2025.
Okay, so a decrease but not necessarily catastrophic on its own.
Not on its own, no, but you add it to the widening losses, the rising G&A from those credit issues, that drop in available cash tightens things. Less buffer, less flexibility.
Right. And this raises some critical questions, especially for you, the listener, trying to understand this. That huge allowance for credit losses, that's a major red flag.
Yeah.
Is Yunji basically saying, we might not get paid for a significant chunk of our sales? Why that's happening is key. Are their partners struggling? Did Yunji extend too much credit trying to boost sales?
Doesn't paint a great picture either way.
No. It hits reported profits, sure, but it also raises questions about the quality of those earnings, the health of their balance sheet. And with cash declining, even with cuts in fulfillment and tech, the liquidity picture is definitely tightening.
They're burning cash.
Seems like it. And that cash burn plus the receivables issue. That's exactly why you see firms like Guru Focus flagging warning signs. They're seeing issues in financial health metrics, especially cash and collectability. Needs careful watching.
Okay, so a very clear warning signal there. With all this complexity, great product wins, but serious financial headwinds, tighter cash. What's Yunji saying about their strategy moving forward? What's the plan?
Well, according to the reports,
They're stating a commitment to a few key things. Focus intensely on improving gross margins makes sense, given their product strengths there.
lean into what works.
Aim for break even, which, given the losses, is a pretty critical survival goal.
Absolutely necessary.
And just generally strengthen their overall financial position. Sounds pretty standard, maybe?
The priorities make sense.
And the principles behind it. Financial discipline, vital. But they also say they want to capture growth opportunities in this, quote, evolving market environment.
the tightrope walk.
Exactly. Sounds like they're trying to balance caution with, well, still some ambition.
And that stated focus, improving margins, hitting break even, it shows they know the pressure's on. They know they need to turn things around. But the real challenge for them and for you watching is how they actually reconcile that intense financial discipline with capturing growth in a market that's still soft.
It sounds almost contradictory.
It is delicate. To boost gross margins, maybe fewer discounts, cut lower margin products that could hit sales volume, to get to break even / costs while somehow also growing revenue.
Yeah. How do you do both?
Can they generate enough new profitable sales to cover those rising operating costs and offset the big credit losses without burning through more cash? That's the billion-dollar question, or maybe the 100 million renminbi question here.
Watching how they execute on those two fronts, efficiency, A&D, targeted, profitable growth, that's going to be key.
Absolutely key for their survival and any future success.
So this deep dive really shows us a company with, on one side, remarkable product development, market expansion strengths. You see it with King Zhang, the coffee, the SUYE beauty stuff. They know how to create and sell products people want and get good margins on them.
Clear operational victories.
But on the other side, they're grappling with these substantial financial challenges, declining overall revenue, that mounting net loss, rising operating costs, and that really concerning allowance for credit losses.
A tale of two halves, as you said earlier.
Yeah. It showcases both success and serious headwinds, that complex dance between making good products and staying financially healthy.
And you've seen firsthand, haven't you, how crucial it is to look past just the flashy sales numbers. You have to dig into the financial statement.
Get into the weeds.
Exactly. The expenses, the cash flow, things like credit loss allowances. That gives you the full, sometimes more sobering picture of a company's health, especially when consumer confidence is low like this.
Right. The context matters.
It makes every financial detail even more critical for gauging resilience, long-term prospects. It helps you understand not just what they sell, but how sustainably they're operating.
Okay, so for you, our curious listener, here's something to chew on. Given Yunji's proven ability to launch strong products, keep those gross margins high, BUT also facing this widening loss, tightening cash, the credit issues, how long can a company lean on product wins to offset those deep financial challenges?
It's a great question.
And if you were watching this closely, say as an analyst or investor, what specific financial metrics beyond just the headline revenue and net loss would you track month by month? What would tell you if they're truly turning the tide and might actually reach that break-even point?
Lots to think about there.
Definitely. Thanks for joining us for the deep dive. We'll see you next time.
Subscribe to my channel Report Stock.